Constructing your life is about much more than just building a bank account. Each week, join real estate entrepreneur and mindset coach Austin Linney as he interviews guests who are constructing their dream lives and impacting the world around them on a daily basis. If you're an entrepreneur or wanting to start a business, or you just want to hear motivating stories of how others have overcome the odds, you are in the right place. And now for your host, Austin Linney.
Guys, welcome back to Construct Your Life. This is Austin Linney here. I have the honor of having Mr. Kevin Brenner back in the house. How you doing, my brother?
Hey, what's up, dude? Look like you're in like a sauna.
I'm in one of my partner's big Airbnbs in the Smokies. I'm in the theater room. I had to flip it around to the wall because it's so dark in here you can't see me. So
the theater room.
Yeah, the theater room.
Is that in the east wing or the west wing? What wing?
Downstairs, left,
okay.
right wing.
Okay.
He's building an indoor pool as we speak. So yeah, So dude, we had you on last time, and we had a great conversation. You had a fund that you have since, we're pivoted into a new direction. You're doing Airbnbs. You just announced like last week, you've got a new salon. We wanted to bring you back. So I'll just have you kind of fill us in what's going on.
Yeah. So last time we had talked, I kind of launched my own private equity company and I think we raised some money and we put it into deals and all of that stuff. But what I was lacking was something that I didn't realize at the time. It was community. When you start a new business, you have, you got to worry about brand awareness, and you got to worry about authority capital and why people should listen to you and this, that, and the other, your credibility, all of this stuff. And the nexus of that firm and that fund and that it was let's take real estate agents and let's get them invested. And I think the big fatal error that I made was that assuming that realtors who are trading real estate back and forth every single day, and they're on the transactional side, would understand the long-term benefits of investing. And the learning curve was just so much higher than I had ever anticipated, because throughout my entire investing career, I've been surrounded by people like you, Austin, investors, people who understand and people who get it. But it's just not taught. So we ran into a lot of issues there, and we were able, like I said, to raise some money and put it to work and everything. But ultimately, we found that unsustainable because we didn't have the community behind us. And there's something to be said there about transactional relationships versus transformational relationships. And I was trying to force a transformational relationship into someone who was only there for the transaction. And that was something that could probably be applied, across many different spectrums than just raising capital and things. But it was super interesting to me. And I went back to my mentors and my team, and I said, hey guys, listen, like this isn't as sustainable as we thought. But at the same time, I was also working with Active Duty Passive Income, the team I've been with for years, on developing something similar. And in this case, it's awesome because we have a community of nearly 55,000 real estate investors who understand the power of investing, who have been in our shoes, who are veterans, who are military, and who we can go and take the fund model, which is becoming all the rage since 2018, since the Fed's kind of loosened up some restrictions, as you know, and probably some of your listeners know, able to go and let's make a tailored solution, a one-of-a-kind tailored solution for that community that exists already, and rely on ADPI as and the teammates within ADPI to put together something really cool. And that's what I've been working on since last we spoke. So a little bit of turbulence, but I think we're out of the turbulence, and now we're leveled off into a space where we just launched this fund, and within 10 days we have $1 million in soft commitments, $960,000 in soft commitments, which is crazy because that speaks to the community aspect of what we're doing here. So that's what I've been working on. Oh, and of course the Airbnbs, they're fun too.
As you go down in business, especially where we are right now, in my consulting business and in my fund with my clients, I find it more of I'm picking them, they're not picking me. And you speak to that part of like having that if you really study human behavior and you study the DAOs and the crypto, and if you really, because I have clients that are in that space, we coach an entire company. You really look at the mechanics of what that means. It's all community based. We're giving back the power to the people.
Mm-hmm.
And nobody that comes to work for me has ever asked what they're getting out of, like, what am I making? They're never asking.
Mm-hmm.
I know that y'all's community and the people that you're involved with, none of those people are asking what money we're going to make from it. They're asking, what can we do for others? And that's something that a whole community and a whole society and a whole business sectors are just going to be lining up to say, we're invested with these people because what they stand for. And in my opinion, that's something that's a lot, a more transitional, long-term kind of horizon view, because I'm not military, but I know I'm going to be invested in that fund just to say that I helped y'all on your mission.
Yeah. And you want to know the thing that like hit me like a ton of bricks? I was up on stage and I was speaking. There was maybe, I don't know, 60 to 100 realtors in the room, right? Something like that. And I did this whole pitch. It had nothing to do with the fund, nothing to do with my business. It was strictly an educational seminar on things that probably a lot of your listeners know about, like what's depreciation in real estate, why you should invest in real estate. Now, remember, the room is full of realtors. Why you should invest in real estate as a realtor? What does being a real estate professional mean in the eyes of the IRS? All of these things, right? Like, give the basics to the investor. And we're talking about this, and you leave the stage, you go to the back of the room, and people come around asking questions, introducing, blah blah blah, all that stuff. And I'm talking to someone, and this person's a big time, big broker, grosses a couple $1 million personally themselves. And they asked me, they're like, hey, I'm kind of interested in this. What referral fee will you offer me to get into to refer you? And I was just like, that was the thing that hit me like a ton of bricks. I was like, it's all transactional. It was completely, what can you do for me? And that attitude has permeated sales. It has permeated real estate agents and brokers, because they don't see it as a transformation. They struggle to see the forest through the trees. Like, I don't have a referral fee. Being in this is going to transform your life. It's going to help you get out of selling, which is the one thing you're at the seminar for, by the way. It was a seminar, like the whole thing was put on to help realtors actually run a business and not just be salespeople. And it just, that was a thing where I had a heart to heart with my business partners after that. And I was like, this is not going to work. Like, if this is a sample size, this is not going to work. And we decided to pivot away. Yeah, I mean, it was really, really crazy to see night and day on the learning lessons we took from the old fund and the old firm to what we put in here. And like you were talking about with crypto and that side of it, like decentralized finance, it's exactly what it is. It's it's taking out the big, the big person in the middle, taking out the middleman and giving the power back to the people. And to a certain extent, crowdfunding is it's similar. There's still banks involved and things like that, but you're giving the power to the people to invest in things that they want to invest in. And you're getting rid of, to a certain extent, things like accredited investor status. Like, no longer do you have to be a millionaire to get in some of these funds. You're taking away the $50,000 minimum investment. You're taking away the layers and layers of fees. Dude, fees on like public REITs are ridiculous. Like, if you actually, like most people, Austin, are in their portfolio probably have like Vanguard ETF, which is, and it's a REIT pretty much. It's an E-REIT. That's what it is. But look at their, like, actually, if you care to do the research, look at the layers and layers of fees, because all they do is they invest or they take retail people's money, like people like you and me and all the other millions of people, and they go and invest that into other funds, and those funds go and invest it into other funds, and those funds go and invest it into real estate. And every person along that chain takes their management fee and their cut and this and that and the other. And you want to know who gets screwed? Us.
And no,
But that is crazy to me, man. It's just crazy.
nobody's taking the time to understand
Yeah.
like
But it's
how this money is basically just shoveled around a couple
Mhm.
times and everybody gets a little piece and then you take your little 8%
Yeah.
and it's like great, right?
Yeah. And it, obviously, I'm glossing over and that, everyone's situation is different. So, but all I'm saying is pay attention to how this works out. And that's what excites me, honestly, about the decentralized world, because when things are recorded on the blockchain and everyone can get a look at them, it's all public knowledge.
Mhm.
You're taking away that that shroud of all of these, of all these things that are happening in the background. You can go and say, hey, wait a minute, this isn't right. Why are you
Mhm.
involved in this? This
Mhm.
is no, this is not cool. And I think that's when you're looking at D-apps and some other things, that's a lot of the framework for what we're going to see in the future here is super exciting in the finance world. But yeah, man, I I was astounded doing the research and figuring this out. So that definitely inspired ADPI Capital and the things that we're working on now.
I'm curious from a different point of view, and I know y'all are mission-driven people, but there's a lot of people in the fund, a lot of people that are, upper management that put this thing together and got everything going. How do you create an environment and a culture where so many people get their voice heard, but also don't step on each other's toes? Have you had any
Yeah. Yeah.
things
No,
like
I
that?
love that. So I'm sure we didn't, create this, coin this term or anything like that. But Mark-Jan Sitch, the founder of ADPI, he and some of the other founding partners, they have this thing called stakeholder capitalism. That's what we call it in the ownership level. We call it stakeholder capitalism, and it's pretty much um, you are given a responsibility. You are a stakeholder to set up X, Y, Z, whatever part of the company that you're setting up, and you take ownership of it. And we all kind of subscribe to that extreme ownership mindset, and we all work together. And if we need something that is someone else's responsibility, then we go and ask, and we get that done. And there's no, there's no like problems like storming and norming and conforming and stuff that you have with like a hierarchy. Be like, oh, I can't ask him because I don't want to look bad, or I can't ask her because I don't have. No, you're a program manager, so manage your program. And that's, most startups, if you think about it, start on this kind of horizontal org chart, right? And eventually, as as companies grow, they get more vertical, because people have more responsibilities, managers, that's just part of it, right? But on these individual programs and these individual entities that are under the ADPI flag and umbrella, the owners are all stakeholders, and we're all responsible. So we all have our own dictated roles and responsibilities. And the amount of ownership and equity that you get in that project is strictly tied to your roles and responsibilities. No questions asked, just is what it is.
Mhm.
So, and that I think has helped by being open and honest, and everyone knows what everyone else is doing. Everyone knows what everyone else's stake is, all of that stuff. It's kind of like, it's kind of like being in the military where, what your boss's pay is because it's public information. It's public knowledge. You want to know how much they're making? Go and Google it. How much does a lieutenant colonel make with 20 years in the military? Oh, great. They make that much, all of that stuff. So it kind of just eliminates that from being a problem.
So a lot of people, especially when they create something like you did, which is a fund, and you got a name and you got branding and you birthed it and you took on money for the first time, and a lot of people when they have to pivot to the new idea or pivot to the new business or change their life around, their identity is tied to that thing they do. Did you have to work through any mindset stuff to kind of
Oh yeah.
know that you couldn't take this farther and kind of put it to bed?
Yeah. I mean, dude, it crushed me, like for real. Like, because it was kind of like my first big thing, like I've done other businesses and stuff. But when you think about being, for me, I had blown this idea up in my head. I'm a fund manager. Like, this is what I've always wanted to do. I'm going to start my own thing. I'm going to do my own thing. And what part of the realization of launching this new venture compared to the old venture where I had partners, right? But I was effectively, I was the HMFIC, and I won't say that what that means, but like I was the guy, and I had that weight on my shoulders, and I took it very seriously. But when I was also, that's great when you're growing something, but when you're ending something too, you're also the guy. And that, that fear of, I think, I had read somewhere that there's no real decisions in life. Everyone knows the right thing to do. They just don't want to admit it. Like when you're facing a really tough decision, you actually know what to do. You just don't want to do it. Mm-hmm. And that's how I felt with in that transition. I knew what I knew what needed to happen. I knew we needed to stop hemorrhaging cash on marketing and things. I knew that it wasn't working, but I wasn't ready to give it up. And finally, when I said, you know what, talk to your mentors, you talk to people in your circle, and they say, the best entrepreneurs out there are the ones who can walk away from a bad idea. And right, but I will tell you, it's always darkest before the dawn and all of that stuff. So I went through some struggles there, but I came out the other end knowing what works, what doesn't work, how to reshape this fund, how to identify your clientele, how to motivate a community and leverage an existing community to go and do something even bigger, better, more special, more effective, and more profitable. And, so for listeners out there who might be in a similar situation, I mean, like if you're facing a tough decision, you probably know what to do. It's just, you don't want to do it. And it, going through with that and having that fortitude to say, no, this is the right thing to do. Just do it, because you're going to learn. The more you let it linger, the more you let it weigh on your head and all of this stuff. No, just do it. Go with your gut and go with your values. You can't lose.
I was telling a client this morning, this morning when I was walking, I took apart every time I've lost money or had to shut down a business or something happened. And I've taken way more lessons away from that. And it's reshaped me to build it up back better. But I've also spent the last year and a half making sure that my identity is not tied to the actual business, but to the mission. Mm-hmm. And the ultimate mission, regardless of the companies that we coach, if you're the CEO and I have to give you some hard truth, I'll say it right to your fucking face, because I'm coaching and consulting for the mission, not for you and your ego and your vanity. And a lot of people get frazzled by that, but understand that I have a whole company with inside there that I have to support, make secure, make sure they have a job, and then something that we can build in the future. And, when they get behind that, they understand, wow, this guy really gives a shit. Right. And so that's why I look at y'all's, the new fund that you have, like, and I mean this wholeheartedly, like it is something that seriously is going to change millions of people's lives.
Yeah.
The wave of impact is like, holy crap.
Yeah. And I think, it couldn't really be done. And that was another thing that, you learn as you go, is surrounding yourself with the right people. I mean, we're bringing on people like Eric Upchurch, people like Tim Kelly, Mark Yancic, Spencer Thomas, Jill Campbell, Victoria Griggs. I mean, all of these people, they're all founding members, Adam Labar, of course, founding members of Active Duty Passive Income, but they're all independently rock star real estate investors, raised, $122 million. They have thousands and thousands of units independently of this in their own thing going on, from across the gambit, from mobile home parks to self-storage facilities to B and C multifamily to short-term rentals so you surround yourself with these people who are already lined up on the same mission of helping the military and veteran community own more of America, own more of the land they swore to protect and defend, right? Like they're already lined up on that. So that's easy. We already know what to do. Now it's how the biggest hurdle was, how can we provide access to the community that we've built and continue to build? Because traditionally, these are alternative investments. I mean, your fund, Austin, my fund, anyone's fund, any syndication out there, they're all alternative investments. Mm-hmm. Some of them unregistered with the SEC, some of them registered. Mm-hmm. It just depends what it is. But at the end of the day, because of the regulation that's involved, a lot of these things are just out of reach for regular military folks.
Let me tell you something right now. Anybody that's listening out there, we love you, we appreciate you, but Kevin and I can tell you that the amount of hoops you have to jump through,
It's
the money
ridiculous.
that gets spent, the boring conversations that have to be happening with tax attorneys and SEC.
Yeah.
It is, I mean, I have learned more in 4 months than I have in 38 years of my life.
Yeah.
It's
No, I
crazy.
mean,
We
yeah,
just got off with a tax attorney today. He was telling me stuff I don't even know what he was saying. I'm like, you must know what you're talking about because I don't know what you're saying.
yeah, no, I mean, like setting this stuff up is not easy. I mean, we've been working at it for the better part of a year. Setting up, especially, so ours is a Reg A, which is effectively a mini IPO, a miniature initial public offering, right? So we're going through even more regulation than, if your listeners are familiar with folks who are setting up Regulation D, 506B, 506C, they're effectively exempt from most of the SEC regulations, right? That's why people do them. However, you, in some instances, can't market to everyone. You have to only raise from accredited investors or qualified purchasers or something like that. So, that was not our community. We have a community of active duty military and veterans, but, folks who are real estate investors, they're not millionaires. Some of them are, a lot of them aren't. So how can we get those people involved? And, that's why when we looked at it, we're like, okay, well, the Reg A guidelines say that we can go down to as low as $10 on a minimum investment. So we're like, well, let's make that $500 to, make, like $10 is a little bit, but like
that'd be a lot of paperwork.
Yeah, it's a lot of paperwork for $10. Yeah. So it's like, okay, well, the first hurdle was, how do we eliminate this $25,000 or $50,000 minimum investment, which most of these opportunities have? All right, boom, do that. What about accredited investor status? Well, with a Reg A, they don't have to be accredited investors, right? Now you have to go through all this other regulation and stuff, but you can raise from non-accredited investors. Okay, boom, figure that out. And then, what about the crazy fees and all of this other stuff? Well, we just don't charge them because that sucks. Like, why is a fund going to charge you fees that's investing in an asset that already has layers of fees? Like, no, that's stupid. So we just eliminated those. And, I make it sound really easy, but at the end of the day, we have this opportunity that's out there, extremely low barrier to entry, access to, great investment, alternative investments like multifamily real estate, like the self-storage facilities and mobile home parks. And the other part, Austin, that is super, super crazy is part of ADPI. It's an education company, right? So we've been training people on how to find and acquire and operate multifamily and commercial real estate. So who are we going to come to find our deals and fill up our deal pipeline? Mm-hmm. Our people. They get number one preference. So it's like a win-win-win because we have this ecosystem, right? And this is not built overnight. So if your listeners are like, oh, well, you just set this up overnight. No, we've been at this for 5 years, right? Mm-hmm. Building this ecosystem. But we built this out. And now it's like, all right, well, if you're investing in the fund, you have a warm and fuzzy knowing that the money is within the fund. You're with ADPI founders and leaders who also have skin in the game, who are investing in the ecosystem. If you're on the other side of that deal and you're finding the deals, you can go and approach a potential seller and say, hey, listen, we're private equity backed. We got the funding lined up. We're not like the other potential buyers out there. So you get more buying power, you get to leverage more. And oh, by the way, you also get the experience of, all of the ADPI team behind you. So it's like this really, really cool thing. And I tell you what, for the future, once we get this first one underway, and we put that money to work and get it in, we're going to be looking into more exciting things like cryptocurrency, like
so my client just bought his company last week, and we're coaching the whole company. We're launching like crazy with Nifty Blocks. It's the whole crazy stuff's coming, but we set a marker. We made a note to start discussing this in July, where we cleaned up some of this stuff in his company. Mm-hmm. But what I'm seeing, and just because I'm coaching a bunch of different companies in the crypto, somehow I jumped into the crypto space for mindset coaching and business consulting, which is hilarious because half the time I'm writing notes down because I don't even know what they're talking about.
You're like Googling what they're saying.
True story. I had my consultants come on the team and we were talking to his whole company of 18 people. And I was like, okay, guys, here's the deal. If you hear stuff you don't know, just write it down. I'll tell you later what it means. And they're like, okay, good. Because we don't know. But what we're looking to do is you have all these people who got in early and they have tons of cash, tons of crypto, whatever you want to call it. And let's just say that doesn't mean that they actually know the inner workings of investing in real estate businesses and stuff. So we're saying, how can we unlock their stuff to match their lifestyle? And so what we're playing around with is creating a DAO all of crypto money to invest in short-term rentals and call it the nomad pads, and then create a network of Airbnbs everywhere where these people that work from their laptop can take a subscription model and go around the world, through they're wild. Invested in it, right? And so like you tell me that, and like I can literally just put everything else down and just build out like Portugal, Spain, France, blah blah blah. And it's great because you need cash, but here's what we're working towards. That's really the rub, is how do we keep the money in the crypto fund and then leverage it against the fund so we actually don't have to transact the cash out of it. And because we pay cash or use a mortgage company, then we can, jump over all the title stuff. So there's a lot of fun stuff coming down the pipeline.
Definitely.
We talked about they're turning me into an NFT in the next couple of weeks. So I'm excited.
I need to get that.
I do. Wait till I show you.
It's going to be one of those pixelated ones. Dude, so it's all like different.
I'll bring up the picture. I'll show you on here. It's crazy, dude. But there's so much fun stuff. We talked about doing coaching calls in the meta universe where we're walking through the forest, like on the coaching calls, like, or playing golf while we're coaching. Like this is, it's fun stuff, wild, man. I love cool stuff like that. And I think the thing that because I have a new client that I started coaching yesterday, who was one of the first people at Alien Worlds, and she has since took a year off and now she's back. I'm sitting on the call and I'm thinking to myself, I need to think bigger. Like she was expanding my mind on like these things. And it's just crazy to be around all these amazing, smart people. And I think that's something, you and I are in the education space. That's something that we take for granted, to just be around people always pushing it and innovating. Like it's something that I really cherish, to like always see the next thing.
Yeah. And it's what I relate to. And it's funny that you say this about this crypto stuff. So I went on Udemy like 2 weeks ago, and I just bought, it was like, whatever, $50 or something like that. But it was a complete course, because I felt like I am way behind, so I went and bought this course and I'm going through it. It's incredible. Now I can have these conversations. I know what these words mean, and I know the why behind them. And I'm becoming a smarter investor. Oh, by the way, instead of just a speculator, because I was definitely one of those dudes who went and like, oh, crypto's cool. Let me buy this meme coin. And, and it's just like, no clue what the hell's going on. But I mean, what I like when I think of Web3 and the metaverse and all these D apps and everything, it's like it had to be when the internet was first coming out and going commercial, because it was all about what problems can I solve. And what we, at that time, if you think about it, the problems that you were solving were, like just connecting people to services, and they wouldn't have to leave the house anymore because they could do it all from their personal computer and all that stuff. And that took 20 years to develop, maybe more. And now it's kind of the same thing, but over the last 30 plus years, we've put all these middlemen in the way, all of these roadblocks. And what the decentralized side of the house is doing, and saying like, no more of that, direct to service. And all of these D apps are coming out with all of those things. I mean, there was one that I had researched just for fun, and it was like, it was their thing. It was called Stepin, I think. And they have their own coin, obviously, and their coin funds their project, like a lot of these utility tokens do. But it was, their thing was make your steps count. And it literally gave you cryptocurrency based on your step count daily. And it was just like, now, who knows if it's valuable and all of this stuff, you want to go and research it, go research it. You're listening to this. I don't know. I'm not your crypto advisor. I'm just saying that this is, there's utility behind these things, and they they have, they're all funded by these utility tokens, and those tokens carry value. So if you're looking at a project and you do the research on a certain cryptocurrency and know that it's a utility token, and you know that, hey, this project is like really freaking cool and it's going to change the world, then yeah, its value will probably go up. And that's how you can look at it, because that's a lot of beyond your main coins of Bitcoin and Ethereum, your main ones, all these other ones, these altcoins, they're all projects. They're all, hey, how can we want to change the world in this way? We want to change Web3. We want to build this D app to connect this on the blockchain. It's the Wild West, but you can find this out.
You and I are getting a little older. We've been in business a little bit, and the things that excited me in the beginning, they don't excite me like they used to. I actually think the other way. And what I mean by that is, somebody asked me on a Airbnb talk that I was talking, like, if you could go back and do it again, what would you do in Airbnb? And I said, I would create a cleaning company.
Yeah.
And it's like when you're young and you're excited, it's like, I want all the flash, I want all the stuff. And it's like, what people don't understand is the crypto, the space is smart contract. That's what it's about. NFTs, crypto, all that stuff. It's smart contracts. And so when you look at a place like Airbnb, you look at a system like, what I love about Airbnb is that people are naive to think that it hasn't been around for like 60 years. Like, there were people renting their houses out in Florida on the beach. It wasn't called Airbnb. It wasn't called HomeAway. And so that is always going to stay. And so what I found, and I'm curious to get your opinion as we move to talk about Airbnb a little bit, what we've decided to do as a company is, I would rather invest in markets and pay a higher dollar, but know that the infrastructure, the government, the city government champions it, loves it. And that's what we decided to do. So we're paying a little bit more, but that's what we decided to do. You look at Atlanta, like Atlanta just, like they just basically like wiped away with them. Like the laws are almost ridiculous, right? And so I think we need, people aren't paying attention enough to know that, like, there's reasons behind why we're investing in certain markets. And I think people are just saying, well, put up an Airbnb, do this, do that. And so, what's kind of your take on the Airbnb market and what you look for?
Yeah. I mean, I think there's, when we talk about it, I think there is a sustainability issue, because governments, I mean, you can talk politics, you can talk about the hotel lobby, you can talk about all of this stuff. But when you look and you follow the money and you realize that Marriott just bought a massive portfolio of short-term rentals that I'm sure they're going to be hooking up their point system to in the near future and allow people to stay with points. The hotel lobby is always going to win here. The Airbnb hosts are the little guys and girls. And yeah, I mean, compliance is huge. Finding that the best place to invest in these things is, kind of that new kind of cute town that people want to be. And you can, it might not be the largest city in the world, but it might be on the outskirts or a suburb of a major metro or something like that, where people want to be and where people are going. Find that place where it's still small enough and you still have some maneuverability and the hotels haven't moved in and just destroyed everything. And you can probably find some success. But really, I mean, I think I'm interested where the industry is going to go, because it's driven by the guests, right? Like, guests they know that they can now, short-term rentals are popular. So they know that, like, hey, I don't have to get a hotel room if I don't want to. And when you look at the model and you realize this hotel room is $399 a night and it's one room, and I can get an entire house with a backyard, a grill, and all of this stuff and live more comfortably for the same exact price. Yeah, I'm going to do that. And, I think it's important for hosts who are new to Airbnb to not get trapped in this race to the bottom and saying, oh, well, I just got this 1-bedroom apartment and there's a million other of these listed on all the different platforms. And now I'm in a race to the bottom with, $60, $70 a night. Problem with that is, obviously you're capped at what you can price. by the market because there's so much. And then of course you attract the wrong kind of guests, the people who are saying like, oh man, I could totally mess this place up. It's going to cost me $300. Who cares? So on the whole, I'm interested where the short-term rental market is going to go. I feel like states at the statewide level are going to start regulating it. And that's what Virginia is doing. In fact, they're passing laws right now to regulate it at the statewide level to say, hey, if you got a short-term rental, here's the tax, pay to play. That's what it is.
Which I'm totally okay with, but where I have an issue, and we saw it in San Antonio, especially in Austin, like the state makes the sweeping, whatever you want to call it, but yet they have no manpower to back it up. So it's like, we're kind of in a, but I agree with you. Like the place I'm in right now is, $1,200 a night. Like it's, they're going to take care of it, like you got to stay 2 nights. It's not like one night. And so, after doing it as long as I have, like where I've had the conversations all week with people that manage 70, 80, 90 Airbnbs. I've met a couple people in my travels and I talked to the owners, they're starting to get more and more and more phone calls from private equity firms. They're but they also don't know what they're doing because they're basing it so off of numbers. And so there's going to be opportunities for people that have Airbnb portfolios to assist or JV with some of these bigger funds and kind of facilitate their portfolio. So there's a lot of opportunities moving forward. But what we're actually going to do is Friday, we're looking at a piece of land where we're going to start building our own Airbnbs. And we're going to sell those Airbnbs to other people along with our management, and then keep 3 or 4 for ourselves, and then kind of rinse and repeat that model because we're just not seeing the value in the market in the turnkey sector because the prices are just so elevated. So we're either doing huge remodels or we're going to be developing our own is kind of where we see the 2 markets for us right now.
Yeah. And I think the not ultra high end, I target kind of the, like if your A+ was your ultra high end Airbnb, I'm in the B+, A- range. Like that's where I want to be. I have no interest in going and taking a building that was built in 1965 and is, just terrible looking and saying like, oh, let's just put some furniture in here, we're going to be fine. No, because it's just, it's all about your guest experience. And, you can certainly put lipstick on a pig for a little while, but it's not, like I said, it's not a sustainable model. So I think when you look at the housing market in general, there is such a massive demand for development. And I was talking about this with a business partner earlier today on the phone. And he's a broker and a commercial broker. And, he's seeing that, a lot of his most aggressive buyers and acquisitions guys are looking at the market right now and they're like, nah, I'm good. On the multifamily side, they're just like, no, this is too inflated. This is no good. The debt structure doesn't make sense. All of this stuff. And you think about it and you're like, well, okay, multifamily is typically recession resistant, right? Like and we're, I don't think there's any arguing that as the bond buying goes away and interest rates rise and the Fed does its thing, that there will be a recessionary period coming up. That's totally agreeable. But what you don't think about is the entire time during this COVID pandemic and when the Fed was propping everyone up and all keeping interest rates low and all of this stuff, it's not like builders were out there building 1 million houses. They couldn't. Labor shortages, supply chain was messed up. Like we were in a shit show before COVID as far as supply and demand goes. And now it's like, yeah, maybe it's stabilized, but it's like, okay, you stop the bleeding. You're still having a heart attack here, so something's got to give. So, for me, I think the future is, I love what you guys are doing because
the ones we're looking at is 24 townhomes, 2 ones, 800 square feet. You can pick it up for $200K all day long. Like, I'm sorry, guys. The average home price in Round Rock, Texas, in 16 or 15 months went from 325 to 575. Guys, we need affordable. Like, I mean, I'm not saying affordable housing because everybody hates that word, but I'm saying, I think we're seeing people scale back and like, like, and so, you can do your luxury space, you can do all that, and that's great as long as the area is trafficked. But I'm more concerned about, where are we going to hit the markets of, not like you said, not like crazy high end, but not low rent, but kind of like that. I found like gold in that kind of sweet spot. Like, I'm a family, or we're staying in.
Yeah,
Like,
love
have
that.
you, like, dude, have you been to Nashville in a while?
Not in, I don't,
An
I've never been to
average,
Nashville. I've never been to Nashville. I just
okay,
had to
average
go there.
an average hotel in Nashville, one bedroom, is like 330, like 450. An average
Insane.
Airbnb is like 295, is like the bottom, right? You can find your little spots here and there.
Yeah.
But I'm like, who pays this? Like, who pays this? Like, and so my opinion, what we're thinking about doing is like, here's your 10, or here's your 4 luxury cabins, so that you have that market. And then we've been looking at these domes that a couple people do out here.
Yeah, the geo, what are
the
they called? Not the
geodomes.
yurts, the geodomes.
Yeah,
Yes.
the geodomes are like 15,000. They rent for like $200 a night. Dude, you're paid off in 18 months and you're rocking and rolling, dude. Like, it's just like, and so you have to think a little farther out, but I think there's a lot of opportunity to create that experience, to create that thing. And if here's what I think, and you dealt with this with your first one. I don't think enough investors pay attention. They pay attention to the metrics that are on the news or on Twitter, but they're not actually studying the behavior of people's trends, which is my favorite thing to do. Like, where are they traveling? Where are they eating? Or are they working from the road? Like, I love to study the things behind the things so I can kind of ride the wave of that thing. And I think if you do that as an investor and you dig a little deeper, you're gonna have more success over the long term.
Yeah, no, I 100% agree. And that's where your deal providers and deal finders, that's what they're doing. They're finding the 5-year trends on where people are moving. They're finding what's growing, what's declining, and what submarkets are growing and who needs the most and everything like that. But I think as the supply chain fixes itself over time, I think that development is going to go crazy in all types of places. Like
100%.
Development is going to go crazy because, if you compare the United States with like other similarly sized countries, we have like no housing and a ridiculous amount of land, a ridiculous amount of land. And it's just how the system's set up. For better or for
what
worse.
They don't tell you, right? Like, what they don't tell you, like, let's just, this is the stuff that nobody knows, that I know because I play golf with a lot of investors around the country. Like, single-handedly, the big builders on purpose are holding land and the supply so they can control the price. And so that's why they're squeezing the market. Like, hello, like, it's like, if you don't know that this is going on, like, they picked up because they have to put the land in a land lottery, and it's a whole thing, and they get it because they could pay the most. And so, like, yes, we have a labor shortage. Yes, we have a supply issue, but there's also this butting up against that too. So I think you're going to see
capitalism.
Yeah, I think you're going to. Look, here's where I always thought when I worked private equity and got out of it, and I saw the market trends. I think that if you're positioned in the development space over the next 30 years, I think it'll be the greatest run you've ever seen in your life, no matter what the economy does.
Yeah, I mean, people are always going to need a place to live. And you look at, these B and C class places that are now turning into D places because they're just getting older. And you look at these other, what's becoming a B class is a 2000 build or a 2005 build or something like that. And you're like, wow, I thought this would last a lot longer. And to a certain extent it does on the commercial side, but you look at where the market is going, and it, there's still a ton of people in the country. There's still not enough single family homes. And there's so many, like, those different factors that you mentioned, Austin, they're out there. So how can you, the investor, get involved and figure out, like you were talking about, how to ride this wave? And the way I figure, there's 2 ways to do it. One, you can learn how to become a developer, invest in your education, and start developing property. The other way is you can invest with someone else who's doing this. find a fund, find a syndication, find someone, find a partner, find something, and say, hey, how can I get involved? But if you do none of those things, which is always an option on the table, is to do nothing. That's always a choice that we have. You're going to be left with nothing. So
well, I think the number one advice I can give to everybody as we get out of here is as a real estate investor, it's very common to go to the same meetups, talk to the same flippers, do all that, the same myopic conversations. I have made it a point to myself the last year to talk to the lawyers, to talk to the tax accountants, the dentists, the surgeons, the marketing people, and get out of the real estate bubble so I can get a full picture of the world and what we're looking at, instead of living the same narrative over and over again, like the guy that you hang out with that just flips houses or just does Airbnbs. Like you have to get a full picture of your investing portfolio. And as I get older, there's layers to this thing, and it's 9 layers deep. And so my suggestion to you would be, if you're a real estate investor and you're looking for private lenders, or you're looking for syndication partners, go to the doctor convention. Don't go to the real estate convention, because then you're the real estate guy at the doctor's convention instead of the real estate guy at the real estate convention.
Yeah, it's like big fish, small pond kind of a thing. The problem is when you go to the doctor's convention and they start talking about doctor stuff, and you're like,
well, you find a common ground.
You're like Leonardo DiCaprio in Catch Me If You Can. I concur. Yeah, I concur. Do you concur?
I love it. So if people want to find out about the fund, they want to look into it or invest, how would they do that?
Yeah, so it's super easy. Just head over to ADPI Capital, one word, adpicapital.com. And, all the information is there. Right now, as we record this, which is the 11th of May, and I don't know when this is going to come out, Austin, a couple of weeks, probably, whatever. Right now we're going through SEC qualification, and a fund this size, that's completely normal. They're going to do their thing. They're going to take a look at it. So we should be fully qualified in the next 4 to 6 weeks. And from there, it's a $10 million fund, $500 minimum investment, no fees, can't lose. So, if you want to learn more, head over there, check it out. And you can always reach me at invest@adpicapital.com. I'm happy to answer any questions.
I love it. Well, I'll probably run through all the founders over the next couple of months so I can give them some love. Eric was like number 7 or 6, and I haven't had him back on yet. So we're almost at 400. So it's time to have him back on. But
well, he told me today. I told him I was going on your show. He's like, "Hey, tell Austin I said hi." And I was like, "All right, yeah, I got you."
Yeah, I love it. I'm gonna send him a thing. We'll get him back on. He's too busy buying storage units, but
apparently, yeah.
Yeah, but guys, if you love this episode, send it to a friend, and we'll see you next time.
Thank you for listening to Construct Your Life with Austin Linney. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to start constructing your life by taking immediate action on what you learned. For show notes, resources, and more information on one-on-one coaching with Austin, visit constructyourlifepodcast.com.